Fort Lauderdale. Okay, it's similar to Miami. It's like right next to it. So in terms of data, it's sometimes a little bit hard, but don't worry. When we actually do our actual market analysis, not just this summary that's kind of like super quick, we have what I call proxy data. And statisticians and economists are very familiar with using proxy data, where we make sort of different questions that once answered gets us very close to what particular metric we're looking for. And so very similarly, Fort Lauderdale was also not bad too, pretty good. When it comes to the median housing prices, way up there, just like in Miami, up 23.75%. Now, what I was showing was rents over there for Miami, but like rents are up, property values. I'm just giving you little snippets of various markets. Orlando, holy cow. So their GDP, it was so-so. It didn't really get where it needed to, but that's significantly changed. And one of the reasons that we don't care is because their population blew the H up. Population went through the roof, 1.19%, huge growth. They're just attracting and attracting and attracting people. And of course, where people go, they need a place to live. So generally speaking, when it comes to Florida and conclusions there, macro indicators, politics and policies, I mean, there's huge influencers. The state government is very open. They're not going to be closing down. They're all about business. They're all about supporting. They're all about freedom. So some of the other indicators is that there's just huge opportunity for real estate investing, and you want to watch for outpacing and leading growth. So this is all a buy signal. Now we went back to Canada, Kitchener, Waterloo, Cambridge. I know all you folks out there. Right on. All right. So this is a great example here. I mentioned that proxy. These are kinds of the questions that we would look at if we didn't have GDP. This is GDP data for KWC. So answering these questions, feel free to take a picture of them. You can answer them too. If you answer these, they're correlated to actual GDP. And if they're going up, then chances are your GDP is going up. It's fairly, very simple. And when it came to KWC, the answer is yes. Huge innovation. It's also the 5th largest CMA in Ontario, which is size matters when it comes to real estate and real estate markets, 100%. So those are things that we do take into consideration, size and growth opportunities as well. So when we looked at it, it's like, okay, we're sort of just at that coming into an expansionary phase. We're not even all the way in there for KWC. So we marked where we are as just at the end of stabilization. And these are some of the do's and don'ts when you're at the end of stabilization. You can do all of these: buy and hold, rent to own, fix and flip, agreement for sale to buy, option to purchase, vendor take back. You want to be cautioned to do a rent to own. Totally doable. It is doable, but just be cautioned on it because it might be more challenging to get that extra little lift that you need out of it. It's not the greatest idea to do an agreement for sale to sell it because the market will be going up a little bit further. Ottawa, we did that as well. And look at that huge population growth in Ottawa, 1.78 compared to 1.18 for the rest of Ontario. These are good. Stabilization period, a little bit further back in stabilization, meaning that there's more expansion to come in Ottawa. What? Denise, Stuart, are you kidding me? Yes, it ain't over. This is a long run, like a decade. Yes, we're going to have such a great party in like 2032. Let's do it. Yeah, the decade party. I love it. So in middle of stabilization, very similar to towards the end of stabilization, but there's a couple things that you do and a couple things that you don't do. Rent to owns are not in the picture at this juncture. You can do anything at any time. You just want to be mindful where you place your energy and do it right. Phoenix, man, Arizona in particular, like as a state, and then Phoenix, oh my gosh, like just incredible growth from an economic standpoint, from a net migration standpoint, from a jobs perspective. There's a lot going on there. It's highly attractive. And by the way, here's a little tip. If you didn't see this already, here's the top, not in order, but some of the top cities in Metro Phoenix to check out. So I was really grateful. I went and took myself on a tour of Phoenix, I think last year. And I went to Chandler, I went to Mesa, I went to Tempe, I went to Gilbert, I went to Scottsdale. I went and visited all of these locations because I was looking at, guess what? Buying real estate there. So I haven't done it yet because I've been focusing on Hawaii, but these are some fantastic cities. So buy signals, generally speaking. Houston, we've just got one or two more here. Texas, we got into that. 9th largest economy. Look at this. Texas enters 2021 as world's 9th largest economy by GDP. This is Texas. This is a state, one of the 9th biggest world economies. This is huge. Okay, so what we're seeing there is huge growth. That's awesome. We're okay with that. Everything, it's full recovery already. Conclusions for Houston is the population is growing. It's attractive. It's affordable. There's lower home prices, lower taxes, cheaper land, growing, diverse economy, jobs, industrial and office space, you name it. This is definitely absolute buy for the years ahead. So that's a buy signal for Houston. And for Dallas, this is our last one at the moment, is that also similarly huge growth, nominal impact based on the pandemic restrictions. So that's fantastic. And similarly to Houston, there's a lot going on there in terms of lower prices, lower taxes, cheaper land, and all this growth. So again, we want to really point out that between Houston and Dallas, those are really good markets to buy in.